All right, so welcome everybody to the first ever Composer community collab. I'm going to run through kind of like what this is and explain this live stream and what we're doing here, so that way everybody's kind of on the same page. We posted about it a little bit in the chat, but just so that everybody knows. So we've had this discussion in the Slack channel a bit, but I don't think we've done it on the Discord yet, where kind of comparing Composer to hedge funds and using this software to design algorithmic trading strategies, because that's what it was for. And there's different arguments, and it depends on what side of the fence you're on. Whereas a lot of people say you can't compete with hedge funds because they're billions of dollars and they have infrastructure and all these systems and stuff. And there is an argument there, but I think I hate to like pull this up immediately in this call, but when you look at Wall Street Bets and what they've done, especially in the GME fiasco and everything else that's been happening, it shows the power of mass collaboration and mass unity of people working together on a common goal. And I've been very vocal on the Slack channel on how I think Composer is going to evolve in the future. I think it's going to be more community driven and more like what we're doing right now. And I just kind of wanted to walk through what we're going to be doing in this call. So I think that one of the things that we have over institutional is manpower. So right now there's only 10 people in here, but this is the first call and we've only got 100 people I don't even think we've crossed 100 people in the Discord yet. Yet 10% of us are here on this call right now, and there would be more if it was difference in time zones. But I'm thinking 6 months from now, a year from now, we might have 100 people on this call or 200 people on this call, and then 2 or 3 years from now, it might be 1,000 or even more. Who knows? In that light, I've been thinking about how can we create a system or a community that enables us to capitalize on that manpower, capitalize on that brain power. 100 intelligent people working on a problem will come up with a better solution than 1 or 2 people coming up with a problem. And that's where this idea for the community collaboration has started. And it's really about trying to maximize the manpower and the brain power and deploy it into strategies that we're designing. So what I've been working on for the past few days, and I've shared this with Ken and Derek, I think they'll be like the lead designers here so far until I get to know more people and see the ability and knowledge level of everybody. But what I'm thinking of doing is I've got 3 strategies that I'm going to walk you guys through, and I'll show you how they work. And then we divvy up each strategy into teams, and then the teams will take a section of the strategy or a piece of the strategy, and they'll optimize and refine that specific section of the strategy. And we can do like a breakout room style work where we take 30 minutes to break out, and we just kind of crunch numbers and change numbers and see what we can come up with to make the strategy more efficient. And then we come back at the end of the 30 minutes and we basically talk about what we learned or what we saw and what was working well and what wasn't. And then we take the best pieces of every design and we turn it into a super strategy. So with that said, is there any questions on that so far? So I'm reading the chat, so feel free to say anything. Yeah, so Derek, I do. So we're going to be talking about volatility protection. I have a strategy that I've designed for that framework.
Okay, cool.
Black pepper, that will. Oh, one sec. I got a alarm clock. Black pepper, that will mean we have to scan for 20 companies daily finviz, so we have to update the list. So yeah, that's kind of the downside of doing those scans. Black pepper, we won't be doing that today. We're going to be doing a mean reversion strategy, actually 2 mean reversion strategies and a volatility strategy. I'm not getting any audio.
Quick.
Say again.
Sorry. Real quick, can you guys run me through what finviz is? I've never used that.
I've talked about it in one of the YouTube videos. It's a fundamental scanner. I can show it to you real quick, but it's really good for putting together a stock list. So can you guys see my screen?
Yeah, it's a separate it's a separate screen within the chat room here.
Okay. Yeah, so FinViz is a fundamental screener,
Okay.
Derek, and you can scan all kinds of things here. We won't get into it in this live stream, but yeah, you can scan for like debt to equity, long-term debt to equity, quick ratio, which is basically like short-term debt to equity, just all kinds of things. And I've used it in some of the YouTube videos to build scanners and screeners. And another nice one you can do is scan by industry, which we actually might end up doing. I don't think we'll do it in this live stream, but we are going to do it because the strategies I've been designing is around semiconductors, and it's a very emerging industry that's going to be the backbone to a lot of tech that's coming out. There's one company in specific, I think it's AOSL, that has like a monopoly on the machines that make computer chips. Are like $200 to $300 million a piece per machine, and there's only one company in the world that basically owns a monopoly and patents on it to do all that stuff. But we'll get to that in a minute. So let me hop over here to the course curriculum, and some of you might have seen me post this and talk about this, but I found this post on the Algo trading channel, or Reddit, and this is a photo of the one-day cumulative returns of the SPY and the QQQ over since 1999. So you can see this is kind of the mean reversion. We're going to build a mean reversion strategy around this. So you can see that there's actually a bit more volatility on the back end, and that makes sense because markets usually fall faster than they climb, and there's less mean reversion on this top side. So with that said, I went ahead and designed a strategy around that. And if I can remember what it's called. I think it's this one.
Is it the one that you sent to us?
Yeah, actually I posted it in the Discord, didn't I?
Yeah. Well, I think it was in the builder's private.
Yes.
K-Wave. Yeah.
K-Wave 2, K-Wave 1, high volatility. Yes, I believe this is it. This is the RSI one, or is it 20 day? Yeah, so I designed two, but we're going to start with the one-day cumulative return one. Okay. We'll go ahead and ignore the semiconductor stuff for now. So the way this strategy works, first is this is a backbone to volatility. The first thing we're looking at is the UVXY. If we go over to our charts, UVXY, it decays over time, but I noticed on the RSI, if you set it to, I believe, 30-day RSI on UVXY, you get a very similar chart to VIXY, the actual volatility index. So this is the RSI for UVXY, but if we look at, let me actually add another bottom chart here, and then we'll go to the VIX. You can see a very heavy correlation here to this. It's almost identical. So I essentially, if you ever want to use volatility in any of your strategies, you can use the 30-day RSI of UVXY, and it basically mimics the VIX index. So that's a little trick there. That's the backbone of this strategy. And what we're doing is we're creating a different mean reversion band based on whatever the volatility is. So if that doesn't make sense, I'll explain it to you in a second. Let me open up a new draft real quick. So this is the low volatility. Actually, let's do the medium volatility because that's the in between. So this was the original strategy that I built, and it's just a very simple. What it does is it looks at the one-day cumulative returns of SMH, which is Semiconductor Index, and it will scan to see if it's 1 day overbought or oversold. So if it's down 2% or more, it will run this, which is a volatility hedge, and it's taking a long position on SOXL. If it's below 2.5%, it takes a heavier percentage, and then if it's over a negative 3.75, it takes an even heavier position. And then I also have an in between here, which is like a 30-70 split between the volatility hedge, which we built in one of the YouTube videos I think it was 2 episodes ago. And essentially, we're just doing a mean reversion. So back to this photo, whenever we get into this band, we're essentially taking a 1 day long position, 3x to long position, to mean reversion back into normal mode. So any questions on that stuff so far?
No.
Is this not making sense to anybody yet? I know I'm moving fast. Okay. So the other thing is it's basically the exact opposite. So 1 day cumulative return of SMH is greater than 1.5, 2.5, and 3.5. And you'll notice that this range is a bit smaller than the other one, and that's because the bullishness is typically less volatile than the bearishness on a strategy. Now, if we go over to SMH, this is where you can start to design these strategies. Let me get rid of the other chart here. And I got to add rolling returns real quick, or I think I might have it on here. Yeah. So this is my rolling returns. If you don't know what this indicator is, if you go up to indicators on TradingView, you're looking for rolling returns by Jamie Dubskika. And this can be set to 1 day look back. And I'm going to turn up the brightness so you guys can see it a little bit better. But this is essentially the 1 day returns of SMH. And then you can use this wavelength basically to design the mean reversion. But you'll notice that there's there's volatility here. So when volatility increases, we get a higher mean reversion. So in normal, I would say normal levels is probably like right here, which is a 1.1% movement. A little bit below that, we get more volatility, which is 3.4, and then on the max range, we're getting way down here on the market crash, which is up to 9 to 12% per day. And then on the opposite side, we're only about 10% on the positive side, whereas the bottom is a 14%. So you have a higher drop, a faster and more volatile drop, and a slower upside. So with that said, I essentially started to segment out the strategy based on the UVXY. So if I switch this bottom chart to UVXY, and then I just copy RSI and put it down here, now we see an overlay of the RSI of UVXY and the 1 day cumulative returns of the SMH. So here you can start to drop lines and you can basically test. So if we want to test, actually, let's go back to the strategy real quick. The high end of volatility is 63, and then the mid-range volatility is 44. So if we go back to the chart, I can switch the bands of the RSI to 63. And then 44, was that right? Yeah, 44. So now we have high volatility, low volatility, and medium volatility. And then we can essentially section out the strategy, or the 1 day cumulative returns, and then measure the bandwidth, or whatever you want to call it, for that. So if I've got my cursor up here on the SMH, but I'm looking at the bottom here at UVXY, and I want to drop a line right where UVXY starts to spike above 63. And then I'm going to do the same thing when it drops below, which is right about there. And then we can scroll in and we can start to see or measure these price movements. So it seems like when volatility is super high, we want to probably have a bandwidth of 7.35 to 14%. So if we go back to the strategy, let's go back to the simple one that we're just testing. Well, where's it at? This one, just medium volatility. Let's just do a run back real quick and see what this performs. So this is the mean reversion of just the medium volatility. 115% annualized, 33% max drawdown, and 0.33 beta. And I don't believe this actually invests. Yeah, it does invest in the semiconductors. But if we do shy, just a flat hold, we're not investing. We're only doing mean reversion. We're not investing in an underlying asset. We still get a 57% annualized return and a max drawdown of 32%. So, any questions so far?
Yeah, so just so I'm understanding, so these if-then statements are based on that picture that you posted, those one-day cumulative returns on the NASDAQ, is that right?
Correct.
Is that where you got
I got the idea from that. I said, okay. That's interesting that you can see the aggregate of one-day movements since 1999 on the SPY, and I got to thinking, well, how can I take that and design a strategy around it? And that's where I came up with what we're doing now.
Yeah, that makes sense.
Yep.
Now this SMH, that's a semiconductor ETF, you said?
Yes, it's semiconductors. So I'm gonna do this again on. Let's mark.
The one that I've been. Sorry, go ahead.
No, go ahead. What are you asking?
I was going to say the semiconductor ETF that I've been going off of is SOXX. I'm assuming they perform pretty much the same.
So yes, SOXX. I think there's a SOXX versus SMH. I think there's a lower cost ratio.
Okay.
Yeah, I can't remember why I chose SMH versus SOXX. I was looking at SOXX. It might also be a volume thing where I think SMH has more volume. I always like to invest in whatever has the most volume because that provides liquidity, which will help with. Yeah. Ideally, you probably want to do both. Actually, that splits it up 50-50.
Yeah, I just want to make sure I wasn't using the wrong ETF that's not going to give me the most accurate data. You know what I mean?
Yep.
I used the SOXS.
Okay. So that's kind of the first strategy. Now, what I ended up working on too after that is I thought, okay, this is the one-day mean reversion. That's great. But what if we could create a mean reversion for a multi-day or a longer version? Like I've been reading Market Sense and Market Nonsense, which is a phenomenal book. I highly recommend every one of you reads it. But he talks about in that book, if you want to perform better, typically you want to buy underperforming assets and leverage into them that are performing well. For example, semiconductors. When semiconductors become low on the RSI, you want to buy more of it because as long as the overall market's moving up, you are going to profit from that. So with that idea, I built an RSI strategy that's very similar to this one-day mean reversion. So if we go back to RSI and I go to SMH, if my computer loads, semiconductor G. Okay, so I call this semiconductor GMR. Come on, load. Okay, here we go. So this is the SMH. I'm going to clear my drawings real quick. And what we're going to look at is this strategy here. So I did a very similar, I did an RSI split. So anything, if the 5-day RSI of SMH is less than 36, we go into a oversold strategy. And then we have all of these checks. And this was a pain in the ass to put together, but it took me a while, but I got it done. And what this does is very similar to the one day. It just does it in a different way. So it increases the daily RSI. So the first one is a 5-day, and then a 10-day, and then a 15-day, and that's actually a mistype. That should not be a 15, so I already found an error. Yeah, you might find errors in some of this design. 20, 25-day. 30. Well, that probably screwed up my... I'll probably have to go back through this and fix this. Okay, and 50. So what this is looking at is a 5-day to 50-day RSI, and I'll show you what that does. So over on the chart, if you go to RSI length 5, we're looking at anything under 36. So the lower band is 36. I think the upper band was 70. So anytime we are under the 36 on the 5-day, what we're going to do is we're going to put a small position into SOXL, which is a 3x bullish version. So we're doing a mean reversion, but we're doing a weighted mean reversion. And as the RSI drops heavier and heavier and heavier, we take a heavier and heavier position. So here we're 50-50, and then here we're 20-80, and then at the bottom end we're 90-10, and then at the very bottom we're fully in on SOXL bullish. And going back to it, if you start increasing the RSIs, you'll see how this works. So 10-day RSI, the bands start to get smaller. 15-day, 20-day, 30. Let's just do 30-day. And then 40-day and 50-day. So 30-day. So we're starting to take so you take a heavier position here, but it's turned off on here. And then 40-day, we're basically completely out at that point, I think. There's a few more days in the past that it does that. But yeah, that's essentially the strategy. We're leveraging into position heavier and heavier as the market moves down. And then when the market's not under 36, we go into a 5-day strength index of SMH is greater than 70. So this is the oversold or overbought version, and which is the exact opposite, just everything over 70. Now this strategy, and then lastly, I think the momentum, I just copied your simple strategy, Derek. I did a 200-day SMH over the 20 short strategy. This one doesn't perform as well as the 1-day, but it still performs pretty well. It's got a 28% max drawdown, 63% annualized, and this is where it comes into play. I'm talking about combining strategies and maximizing brain power and all that stuff. So let me jump back over to the screen. So what I'm getting at is I'm going to release all 3 of these strategies. So I'm going to release the 1-day, the RSI band, and then we also need some kind of advanced momentum strategy. Derek, if you want to handle that, like take your QQQ or NASDAQ for the long term and just modify it for SMH. That can be our typical buy and hold. And then I'm going to be busy for the next until like October 7th to 10th. I can come back and then we can do another call and basically take the best pieces of every design, put it together, and then we'll have a super strategy. Make sense?
Yep.
Other than that, some things I've been thinking about. Well, I'll show you what I've been testing so far so you guys can get up to speed on this. So originally where's it at? So the semiconductor GMR, what I started doing is I started waiting. The first thing we're doing in this strategy is the 1-day. So we're checking 1-day cumulative returns, and then we're moving into the RSI strategy, which I don't think is the correct way to do it. I think the correct way to do it would be the backbone of the strategy would be the RSI 5-day to 50-day, and then we would have 1-day mean reversions that are weighted to the RSI. So I hope this makes sense, but well, I'll try to show it to you. For example, let's do the 30-day RSI. So if the backbone of the strategy was the 5 to 50-day RSI, and we're under the 36 here below, obviously there's a higher probability of bullishness than bearishness, which means on the 1-day, we would want to weight heavier for bullishness than bearishness. I hope that makes sense, but that's something that we're going to have to test and experiment with. But long story short, I went ahead and combined both strategies. So we've got the high volatility here, which I believe it goes into the semiconductor RSI strategy. So I've got the RSI strategy here as the main investment when it's not moving a lot, and then when UVXY is medium volatility, we're doing actually a split, a 50-50 split between the 1-day mean reversion and the GMR RSI mean reversion, which I don't think is as efficient. And then at the bottom end, we have a 20-75 split between low volatility and semiconductors. And this, as is right now, runs 2.9, 157 annualized and a 30% drawdown. So yeah, that's what I've been putting together for the past few days and come up with. Is there anything you guys want me to go through or explain or talk about? Because now's the time to learn.
So can you scroll down just a little bit to where the where it's trading on what day it's going to what at the bottom?
Oh, down here?
Yeah. So let's go back to 2016. So do you see how it's saying 163 days traded of 178? Is that?
Yeah, I see that.
Okay. Are we? Is this going to be hit with a pattern day trade rule if it's trading almost every day?
That's a good question. I've never seen that happen in. I've got a lot of daily traded strategies that I don't think I want. That's actually a really good question. I didn't even think about that.
Yeah, the reason I ask you is because when I was building that TQQQ strategy for the long term, I was trying to keep that pattern day trade rule in mind. So the only times that my strategy gets close to that pattern day trade rule is when it's buying the TECL when TQQQ is below 31. A lot of times it's bouncing back and forth, and it'll trade right around 3 or 4 days, and then kind of get out. So if they're applying that pattern day trade rule to Composer, there's times where I'm going to hit it. Mm-hmm. Obviously, unless you have more than 25,000 in that account. So otherwise, it's not going to matter at that point. But
yeah,
if you're one of those guys out there that have $1,000 in it, $500, whatever. Obviously, you don't want to get hit with that rule.
I actually don't have 25K in my account right now because I'm doing a 6-month experiment to see like how it's performing. I'm liking it so far, but I haven't been hit by the day trader rule. And somebody was going to chime in.
Can you hear me? I was trying to talk earlier.
Yeah, what's up, Kyle?
I was going to say, so the reason symphonies are set up to trade only once per day is to avoid that exact issue. So that's why there's just a single trade period right now on any symphonies to avoid pattern day trading. So it shouldn't be an issue.
Okay, cool.
We've never had anyone hit it before, except for Ben early on when he was setting up his account. This is going back to the earliest days of founding, and that's how we discovered it was an issue. So shouldn't be a problem.
Yeah. I forgot. PDT only applies if it's buy and sell same day.
On the same day. Okay. All right. Yeah, you're right.
Yep.
Hey, Kyle,
I don't know why I was.
I have a question for you, Kyle. So, why does it only execute the trade around 1 or 2 p.m. or between 1 and 3? Why can't it execute the trade earlier in the day? Assuming we can only use it once a day, but whenever the indicator get hit, right? For example, whenever we had the drop recently last week, right? If it dropped 4%, and if we set our indicator or our target not more than 2%, it should execute it to prevent us from losing for that day, instead of waiting until 1 or 2 p.m. To execute that, when it's already exceeding 4 or 5% drop for that day. So I understand that we need to only use it once a day to prevent pattern day trading, but would it be more flexible if we can execute it anytime of the day, whenever the target hit?
Yeah, it's so good question. I think the reason it's set up the way that it is for two reasons. One is to try to get strategies to most closely resemble the back test, right? So back tests are run using adjusted closed prices, adjusted for dividends, stock splits, etc. And so that's right. That's a 4 p.m. number that back tests are run on. So we tried to match trading to sort of more closely resemble that. So that's why the trade window is between 3 p.m. and 4 p.m. The second reason is, generally there's a lot of liquidity at the end of the day. A lot of mutual funds are trading at that time, and ETFs. So there's a decent amount of liquidity in the market. We are having conversations about different trade windows, right? That you in the future may be able to customize, right? Like if you want to buy on the open one day and sell on the close another day, like that could be a potential strategy, and you could look at those things. So we're evaluating that to allow that sort of customization. But right now, we've picked that 3 to 4 p.m. window because you have that liquidity, better matches the back tests. Anything that executes daily, right? Like there is that sort of like risk reward trade-off. Like if you're right consistently, like you can have huge returns, but you have to make sure you're on the right side of the trade. And intraday price volatility is definitely a risk on more frequently traded strategies. So that's how that's how I answer it. Let me know if you have other questions. We can definitely go more into depth, or we can handle this offline as well.
Thank you.
You guys go ahead and keep talking. I'm putting some stuff together real quick.
Yeah, no, I think that helps a lot. Trading at the same time every day, especially trying to be as close to market close as you can, because, like you said, if you're building strategies based on being able to back test them, and the back test is based on closing or adjusted closing prices, then your strategy should follow suit. Because if you're going to invest money in the strategy and you have successful back testing, why would you then want the strategy to trade outside of the threshold that it's back testing in? You know what I mean? But every strategy's got its specifics. So I think what you're saying can make sense. It's definitely going to depend on the strategy. Like the one I built, the ones that Garen's built, and all that, they're 100% based on how the market closed, what the prices were at the end of the day. If it closed above a moving average, if it closed below a moving average. Where it helped was, I want to say last week, when my strategy first came back into TECL. So it was in SQQQ, and then there was one day where TQQQ was hovering around 31. It was 31.5, then it was 30.7, and it was going back and forth all the way into market close. And by the time my strategy got triggered, I've noticed it's been making trades at about 3:30, right around 3:20, 3:30 p.m. pretty consistently. So when it finally made the trade, the RSI and TQQQ was still 31 point something. So it stayed in SQQQ. and then it didn't go to it didn't go to TECL until the next day when there was easier confirmation that the RSI was below 31. So that actually ended up saving me because I would have lost money an additional day by going to TECL because the RSI was so close to being under that 31.
Okay. Yeah. The reason I'm asking is because it helps us to prevent losing so much money in extreme condition. For example, the 2019-20 when the market took, what is it, about 15% dip on the day, 10-15%. And if that happened, it will be too late to execute it by the end of the day. I totally understand the strategy, right? Because we've been testing it, we close it at the end of the day. But the thing about it, when we have to create it to where it can be flexible to when it see the extreme condition, it can react to that earlier than waiting.
So you mean like putting in a stop loss feature?
Yeah, it can be a good feature, yes. Because think about it, when you can't wait until you drop 15% because that's very high momentum. When you see it drop 15% in the first 3-4 hours of the day, it's very likely that it's going to make another drop the following day. So yeah, it's just something that come to my mind, right? Because sometimes I understand in a typical condition, yes, 2-3-4% drop, it's understandable that we can do it around 3 p.m. But in a condition where you see about 8, 9, 10% drop, right?
Yeah, I was just halfway listening to you guys. So you asking for like a safety switch on a daily drop to just like cut out.
Yes.
Yeah, I agree. I think that's something solid. What's the biggest drop in a single day in the past 20 years?
I need to come back and look.
What was
Hey.
87?
Black Monday, that was a 30. I think it was 30 something percent, but it didn't. It touched 30 something percent, but it didn't close that low on the day. It ended up coming back a lot.
Yeah. So let's say if it dropped 30% and you set your stop loss, for example, at let's say 7-8%, you would save 20% right there.
I know
Hey.
2015 there was a pretty big drop in one day.
Looks like
Yeah.
COVID was 10%. No, COVID's max was 11%. And then that's interesting. The housing market crash actually had a higher upside than downside. 8% on the downside. .com bubble had a few actually. 6%, 6% and 6%. But yeah, I think Black Monday was definitely the 19% in a single day.
Yeah. Hey everyone. Dan Dawson here. Sorry, I'm a little sick, but love what you guys are doing. Ken, this may address your question a little bit, and Kyle, I'd be interested in hearing you chime in. I can't remember if Composer has been working during the time, but I know there are like circuit breakers on the market, right? So if it goes down like 7%, I think is the number, it's going to stop for like 15 minutes, and then I think if it goes down like 13 and 20%, they like halt trading for the rest of the day. So that may address it. But I mean, Kyle, how would Composer sort of respond in that? Would you just wait till the next day to execute?
Yeah. So if you can't trade due to like the market breakers going off, then yeah, it would execute the next day. And it's a good point. I was going to raise a similar one. Is market drops look a little bit different now with the circuit breakers, right? So
Yeah,
we're not going to hit a 30% down day. It's just, there's, you hit it at 15% or whatever it is, and everyone takes a breath and comes back and kind of reevaluates positions. So
in
it's
in those
it
situations,
looks a little bit different.
I think it might be
Yeah, go
more
ahead.
dangerous though for Composer, because if Composer's not trading till 3 p.m., if first day collapses and we have a or a circuit breaker that halts all trading to distribute the fear, the next day the fear usually still comes in and it continues to drop, but you're basically, you might even hit another circuit breaker. So if we have like a mass panic sell multi-day, it could happen. Your Composer won't be executing trades until the fear ends, and that might completely annihilate accounts.
Yeah, and think about it, if people are actually losing 30% using the Composer, they will start losing trust in it.
Yeah. Yeah,
I know it's definitely something we want to ensure, right? The orderly trading of accounts is paramount to our product, right? That's what it's all based on. I think there's two elements here. Like, one is just kind of like a risk management element that is intra strategy or intra account, right? With folks managing their positions. There's a great adage among traders, which is like, stop loss is not a replacement for risk management. Like, it's sort of like how you put together strategies, how you build your entire portfolio. Like, if a circuit breaker can send your whole account down 30%, like, that's just a risky account.
Yeah.
To some extent.
Yeah.
The other side of it is like, we take very seriously the orderly execution of accounts, and like, we don't want that to get in the way of folks being able to implement their strategy. So I sort of see them as two issues to talk about. And conversations like this are super helpful for us to hear like what you guys are thinking about, like what are the concerns that you have. So really appreciate the feedback.
Yeah, I agree with.
I was just
go ahead.
Yeah, sorry about that, Gary. I was just going to say, and I mean, Ken and Kyle, correct me if I'm wrong, but I believe if you liquidate, the entire strategy, you can do that at any time during the day, right? So, if you're freaking out, you can just liquidate the whole thing. Now that requires you to watch it a little bit, but it sounds like you're watching it anyway. So
no, the point is when you create a strategy, you want to let it run. You don't want to touch it, because when you touch it, you let emotion take over.
Yeah.
That discount the entire purpose of using the Composer.
I think the solution here, I agree with Kyle's solution. Everything I've studied from algorithmic investing so far, you want to have like 500 bots running. You don't want to have like 3 or 4 strategies. You want to have 100 or 200 or 1,000, because you want to have even distribution of you don't want to be weighted heavily into any one strategy, because it's just proper portfolio management. You might have a lot of strategies that are like Derek's or the Bitcoin 2, which has crazy APY, but you distribute that risk throughout your portfolio by having strategies that are short biased and long biased. So that way, if you do have a massive market crash, the short biased ones will mitigate that massive crash. So you still get the benefits of Composer, which is automation, and you don't hands off. I don't have to worry about it, and you're also protected from downside risk and risk mitigation, because you have to understand proper portfolio management, and you have to have asset distribution risk and all that. Which I will eventually be making a full like hour and a half, maybe 2 hour long video on proper strategy, macro strategy of algos. But it's going to be a massive endeavor to create that. It'll take me a few months.
Yeah, and I think it definitely bears out in, once you create a strategy and then you share it, whether it's here, I shared mine on Reddit, and most of the feedback was pretty positive, but I definitely had more than enough people commenting, saying, 46% drawdown, there's no way I would do it, blah, blah, blah. I get it.
What they don't get, though, is if you've got 50 strategies, then each strategy is only, 2% of your portfolio? So a 50% drawdown on 2% is nothing.
Yeah. So I think for me, like I was telling you last time, Garen, for me, I like the risky stuff, at least in my younger years. And as I get older, I'll probably transition out of that.
Yeah.
But I think another good thing to do for those of us that are building strategies is build some that are so simple that even the average person out there could look at it and say, that looks pretty cool. I'd be willing to put some money into that. It's super simple. You know what I mean? How you've been talking about rebalancing this last week. That's a great thing to show the average person because it is going to get their attention because it looks simple. It is simple. It's something they can put money in and kind of feel comfortable with where they don't have to sit there and watch it every day and be nervous. You know what I mean?
Yeah.
Because if the SPY or QQQ is only moving in a regular market, obviously not in a volatile market, but it's only moving 0.3, 0.5, 0.7% a day, most people are going to be able to stomach that. So I'm gonna start making more. I have some that I'm gonna post in the Discord too, but I want to put some super simple strategies out there that would attract the average person that's not already well known. You know what I mean?
Yeah, I agree.
Being able to put money in the S&P 500 and then when it transitions to a bear market, parking the money in something else. Consumer staples is actually a big one that I've been playing with a lot, and it does really well as far as not sinking nearly as much as the NASDAQ or the S&P 500 and actually recovering your account much faster than the S&P 500 or the NASDAQ. And actually ends up working really well. So let's say if you were buy and hold and dollar cost averaging into the SPY, if you just transition just to a consumer staples ETF, once you enter a crash, the account is recovering like twice as fast than it is if you just stay in SPY the whole time. You know what I mean? So just stuff like that where I want to make it, put it out there, and I think it'll help grab the attention of people that are not using Composer because it's exposing you to so many other things other than, stocks and bonds or, risk on, risk off. You know what I mean? There's a whole bunch of different, like that SPY one that you made with the 10% drawdown, but it's
20,
getting a return of 20+%. Yeah.
Yeah. Yeah, absolutely.
That's great. I mean, I think anybody would be open to putting money into something like that.
Okay, guys, I want to revert back to the conversation real quick and show you what I've been doing and while you guys have been talking. So we're really working on like 4 major parts here of this strategy over the next month or so, normal market strategy. So I went ahead and made threads in the Discord, the Community Collab Discord channel. So you'll have these, whichever one you start typing in, they'll pop up on your community thread, and you can begin working on any one of these sections of the strategy. So you can pick one. I think if we want to keep it organized, post your name on which one you're working on inside the thread, and let's try to keep the main community chat clear, so that way we can just focus on these threads. So keep all the conversations of the individual strategies in the threads if we can. I will go ahead and pin every single one of these as well, so that way you can quickly reference them if it gets chaotic in the chat, because there's going to be a lot of people coming in that are new that don't know what we're doing. And I'll also post this recording as well for people to keep up to date with it. And okay, there we go. So yeah, all of this, I went ahead and sectioned off each strategy. So the first one is the 1-day cumulative return, which I already kind of walked you guys through. It's just the 1-day mean reversions. And then as far as improving this, I'll give you an idea. On the high side, where we're overbought down here, I think it would probably be sound to use a volatility checker or a volatility, like, remember Garen's advanced volatility hedge V1, I put it into the strategy of SPY minimum drawdown, the one we were just talking about. I built that one there. That can be a volatility hedge that you can use for the 1-day mean reversion. But then the next one is the 5-day, 50-day mean reversion, then the volatility checker backbone. I went ahead and switched out the strategy to just have shy in here. So it's literally just the backbone. 30-day RSI of UVXY is greater than 63 or 44. If you want to make this more precise, it's going to be more work, but you could do 4 sections like RSI 25, RSI 50, RSI 75, or maybe some kind of version of that. You would have more finite control, but that means you're just going to have to do more work for each section if you want to experiment with that. And then lastly, if we go over to this, the way I think the super strategy will be structured when we put it all together will be the volatility backbone, which is the RSI of UVXY. Then we'll go into a 5-day mean reversion. And I think the way that this will probably end up playing out is instead of weighting by SMH and SOXL, we can probably take the 1-day cumulative mean reversion and put this inside here as a section in here. I don't know. We'll have to experiment with it and see what works, but you can weight this, and then you can also obviously weight it based on how heavily down we are. So if we're only down, if you go to the SMH RSI, as we get heavier down on, say, the 30, you obviously want to weight the 1-day a little bit higher, or vice versa on the high side. And then after the 1-day, it'll be the normal market strategy, which currently is just this. It's just above the 200-day SMH, below the 200-day SMH 20-day. So if there's any new people that are if you're intimidated by the 1-day cumulative returns or the 5-day 50 RSI, if you don't want to handle that, I would recommend just jumping into the normal market strategy and seeing what you can create that will perform well through all market strategies. And I think this is a really good base to start with, which is it's basically a section of Derek Nicholson's by the, what's it called, NASDAQ for the long term.
Yeah, it's called TQQQ for the long term.
Yeah. So if you want to kind of see the bigger strategy of this one, look for Derek Nicholson. His can you actually post that strategy inside the thread for the normal market strategy, Derek?
Yeah.
Okay.
It's I don't want to embarrass you or nothing. It's pronounced Nielsen. My last.
Oh, Nielsen. My bad. My bad.
No, that's fine. People keep texting me. They're like, he keeps saying Nicholson.
My people always fuck up my name too. Okay, so that's pretty much it. Again, I don't know if this is going to be the final structure. I'm just guessing. It might go a different way, or we might have like some kind of rebalancing method where it's weighted 50-50 or 30-70 between the different strategies. We might find that turning off volatility above 70 and just going straight shy bonds would be better. Don't really know, but I'm excited to see what we come up with.
Yeah, this is pretty cool. This is a really good idea. Kudos to you for coming up with this, man, because I think a lot of people, it'll keep attention. You know what I mean? Yeah,
and it gives us something to look forward to getting released and put together every month or every 2 months. And also, I'll post the recordings in the community collab channel for everybody that didn't see this, and then they can jump in on it as well. So the last thing I want to say here with what we're doing in this community collab is this is free to change. Like, you guys, if you have any feedback or if you think that there's a better way to do this, by all means, say it. Because this is going to be an evolving thing that we do through the community. And it's really, the goals here is how do we maximize the efficiency and brain power of the community and produce the best strategies possible. And then really it's just up to the tools that we have from the developers. So the more tools we get from the developers, the more we can make better strategies. So yeah, that's pretty much it. Eventually, we'll see how this first one goes, and then we'll adapt and change and modify for the next one. All right,
Thanks,
that's all.
guys. This is an awesome idea.
That's all I have to say. You guys can, if you want to ask questions or talk to Kyle about anything, we got a dev on here, so might as well barrage him with questions and see what we can get out of him.
Hey, I have a quick question. Just on the rebalancing. So there isn't anything, I think, on the website that sort of talks about that and exactly how that works. So I don't know if somebody's a little bit more in depth on that piece of it, if they could talk about the rebalancing. I know, Garen, you talked about it a little bit, but not in the sense of kind of when it gets employed. So that part I'm just fuzzy on. So if anybody could
I'll show you how I do mine. Yeah, can you guys still see my screen?
Yeah.
So I do it very simply. So whatever your portfolio is, you just take your asset. I distribute even amount of money into every single symphony. So I don't care like how good APY is of one versus the other. The money distribution is always the same. And then you basically just do some simple math. So if you have $100 in each strategy and you want to rebalance at 5%, it's just 95. It's simple 95%. But let's say you have a weird number like 375 times 0.95. So anytime one of your symphonies gets below $365, you essentially do a rebalance of your portfolio. So you just kind of every week go through and see, is there any strategies that are under that? Okay, there is. Let's do a rebalance. And then on the other side, it's 1.5 times. So anything above 393, you do a rebalance. And that's like the simple, dirty way to do it. And then you can also just do like an average monthly, every month on the 15th or something, do a rebalance.
Got it. Thank you.
Does that answer your question, Bern?
Yeah, it does. Yeah, I just haven't played with that piece of and I just saw it in your video, Garen, so I just wanted a little bit more depth on it.
Yep. Yeah, that's how I do it until they have a button to click to rebalance or like a threshold to set for the portfolio, which would be awesome. I don't know what that would take, but yeah.
But isn't that what Composer is doing though? Like, let's say you have where it says trading setting and it's set to a threshold and it's 10%. Take your pick, 5%, whatever. Anytime any of the allocations inside your portfolio surpass that threshold, so let's say one of you're in just two different equities, right? And you have money 50-50. As soon as one of them reaches 61% or 60.1, it's going to rebalance because it's now more than 10% difference in the two assets. So that is
okay.
It's rebalancing your portfolio.
That's it.
In that aspect. Because your threshold is set at 10%. Isn't that right?
I think it's only per symphony. There's not a overall portfolio rebalancer. Unless there is. What's it under? I shouldn't show my personal data. I'll have to cut that out of the stream.
Yeah, I think you're talking about two different things. So Derek, you're right. You can set threshold rebalancing for your individual strategies, and any assets within the strategy will rebalance whenever that threshold is breached. What Garen is saying is that if you're running multiple symphonies, there's no simplistic way currently to rebalance across strategies.
I see what you're saying now. Okay.
Macro strategy management.
Yeah.
Which is
the only way to do that
we're looking at, but you're right. There's not a perfect solution right now.
So
wouldn't the only way to do that is to nest multiple symphonies within the same symphony?
Yeah, you can do that, but I don't know if I would want to do that. I mean, you can, I guess, but I don't know. I would rather have each individual symphony triggering off of itself. You could, yeah. I went ahead and added all of my symphonies into basically, I block them in 12s. So I've got I've got like 38 symphonies running right now, and then I have 3 symphonies that have 12, 12, and 12 of all of them running. So this 2 Algarian symphonies. This one has a whole, I don't even want to scroll down through it because it's a million lines of code, but the way I rebalance is it's pretty simple. I can actually see which symphonies are performing the best, and shout out to Ken, your strategy, your Bitcoin strategy is actually running the best because this actually has the least amount of money in it right now. So Bitcoin 2 is down to $40, but I currently have 48 in it. And what happens actually is this is net deposits and current value. So if a strategy is performing really well, it's going up in value. It crosses the $55 threshold. I do a rebalance, and that money gets distributed back into the portfolio evenly, but the actual net deposits gets reduced. So as a strategy performs better and better, you're essentially paying it off in a way. It'd be interesting to see what this number says in like 2 or 3 years if it's a negative number, because I keep rebalancing because it's such a good strategy. But who knows? But the strategies that have the highest number are actually the worst strategies for deposits, which I think Jesse's screener isn't doing too well. The Funsmith isn't doing too well. This one right here, the Spy Strength Catcher, which I think was episode 2 of the YouTube, isn't doing too well. Has anybody else been using this one, Spy Catcher version 3? But yeah, that's
modify that strategy. And,
has it been working well for you?
yeah, is that 118% return, right?
I think so. 35% over. Well, it says it's supposed to be doing well, but it hasn't been doing well.
Yeah, your thumbnails say there's 118% return on that, and it was the one that I share on.
Yeah, yeah. It looks like it's 154%. Did really well during the bull market, but it's not doing too hot right now. But yeah, that's kind of an in look of portfolio management. And I highly recommend you guys do it. I know it's tedious, but you should definitely do it. But when I do my rebalancing, what I'm looking at is current value. So anything below 45 or above 55, I do a rebalance, and it doesn't look like I'm ready for a rebalance yet. We're getting close on this one, SPY minimum drawdown. Oh, here's a 55 QLD for the long term. So Derek's is doing pretty well. I'll have to rebalance that one.
Just out of curiosity, when did you put them into play?
Well, it told me
at least the one that I made.
I've used a few of yours. I got a few different versions, and some people modified yours, and I started using that one as well. This one's been running since September 13th, so only.
Oh, okay.
Yeah, it hasn't been too long.
As I say, I put money into mine August 2nd, and I think it's right around 26%. It's up 26%.
Hell yeah. Let's.
Derek, how does that compare to your real results relative to what the back test would run for that same period?
So far, it matches up almost perfectly. Let's see. Am I able to share my screen or no?
Yeah, I'll show you my portfolio real quick
Okay.
for those that want to see like the performance. I've been so my grand strategy is we're going to get smarter and smarter and better at this. So the strategies that we produce on the front end are going to be better performing. So the strategies that I started with kind of sucked, and now they're getting pretty good. But since July, or let's go back to June, this portfolio is basically break even. I'm 0% loss right now. Well, maybe $2,968, and currently we're at $2,960. So I've lost $8 over this entire bear market, which the overall market's down like 19% or something. So I have been seeing exceptionally good 0% versus 19% is exceptionally good in my book. I'm just excited for the market to reverse and us start going bullish, because then I can start making a lot of money again. Or we design better short strategies.
Right.
But yeah, you can share screen, Derek. Should be just streaming.
Okay, let me see.
And while he's setting that up, is there anybody that's been using Composer for quite a long time that's seeing pretty good performance in your portfolio?
Not me. I just started roughly about a month ago.
Okay.
So,
I'm assuming you work in finance, Ken?
no, I'm chemical engineer working for a refinery here in town.
Okay.
And my boss came and told me about this stream and showed me your video.
Oh,
And that's how I get started.
nice. Do you have a background in technical analysis or stocks or anything, or you just literally just started crunching numbers?
Yeah, so I was introduced to stock and crypto in 2017.
Okay. Now that's
So,
right when I started as well.
yeah, I got pretty high and then I lost everything in 2018. So
Yep.
that made me learn.
Let me know if you guys can see my screen or not.
I'm getting it's loading.
Okay. Stream is currently reduced video or audio quality. May be due to network conditions. Let's see.
Got slow internet?
It's pretty good. I have the I have Gigablast with Cox. Let's see. Honestly, it's probably Peter.
That's a perfect branding name.
Let's see. Do you guys have Cox or no?
Nah,
I'm in Arizona.
I'm like DSL on the internet on the country with like 2% upload or 2 meg upload.
Sweet.
I'm amazed that I'm actually able to stream.
Here, let me try. Can I
Derek, which symphony is this? Is this the TQQ or the QLD?
No, it's my TQQQ for the long term.
Okay.
So I actually have most of my money in the TQQQ for the long term. Just because if it does as good as it says it does, then I want to have at least a good chunk of money in it. So that's why I put most of my money in it. But as time goes by, the more it profits, the more I'll take those profits and allocate them to other strategies. So that's kind of what I've been doing. All right, here, let me try to end it then. Let's see. Okay, let me try one more time. 20.
How long did it take you to build that Bitcoin strategy, Ken?
2 days.
Were you sitting at your was it like nonstop 2 days or just like after
No,
hours?
actually, it just came to my mind like after watching your video, I sit back and think, oh, let's try Bitcoin because the volatility is a lot higher than any of other assets, right?
Yep.
So I say, let's try it. So, and I only worked, I think it's about 3 or 4 hours a day, and I kind of get it to where it can give me a return of about 150, 160%. But I didn't like it, so I spent a couple more days to actually improve it. And
Yeah.
obviously, it can only reflecting on the bearish market right now, not the other way yet. So, that's why I want to share with you and everyone on here. And, if you can have any feedback, any input, feel free to improve it.
Yeah, while Derek gets his stream rolling, I think I've got some crazy strategies from way back when I first started. I built some insane strategy. I can't remember what it was called though.
I'm just trying different settings here.
It's not that
Yeah, it
one.
just keeps giving me the same message. Yeah, if it doesn't work, I'll send you guys a screenshot in the group chat.
So Jaren has your symphony that he can share.
Say again.
Jaren, do you have is it, Derek, a strategy that you can share instead of?
Oh yeah, just share it in the Discord.
Yeah.
Are you talking to me, Ken? Sorry.
Yeah, you can just, Jaren can access your symphony and show it to all of us instead of you.
Yeah, just post it in. Which one are you sharing?
My it's the teachable. Well, I was going to show you guys my actual live portfolio
Oh, okay.
just to show you the real, because he was asking, has the performance.
You want to just can you do a screenshot and just post the screenshot in the general chat?
You know what? I've never even done a screenshot on a Mac. Do you know how?
No, I never use Macs. PC Master Race.
There you go. Yeah. All right. Yeah, I could try real quick. Let me see. I don't think I know how to.
Does anybody have a good China strategy? I have been racking my brain trying to get a yin and yang strategy or something to work, and nothing works.
It's just really hard because of the geopolitical issues that we have. We don't know when it's going to happen. So.
Yeah. Looks like if the
something you should look into is India, because India,
Yeah.
since China has a lot of what is it?
Actually, Wes, are you still in here? So, is he still in here? Yeah, he's still in here. So Wes works with a guy that I'm going to be working with very soon, Jesse Greeter. He actually runs a private equity firm. What's the asset under management, Wes? Can't hear you, Wes, if you're talking.
Can you hear me now?
Yep.
Yeah, probably about 20 to 25 million. So it's a smaller firm yet, but we're definitely in the growth phase, and we're scaling a lot of our portfolio companies currently.
Yeah, Jesse told me they had they do a lot of importing from Taiwan and work with inside China and India, and a lot of work has been flowing out of China and into India.
Yeah,
Look into
definitely.
Vietnam and India.
What is the India ETF?
INDL. That is 2x leverage. India.
Okay.
Yeah, it's not working for me. I'll have to figure it out another time.
Okay.
Yeah.
Yeah.
But
Maybe
I'll send a screenshot in the chat.
maybe that'll be the next community collab, as we can build some kind of emerging market, or we do need to risk distribute. We've been doing a lot of S&P 500 US stock equities, maybe something emerging markets or commodities, gold and silver or something. We should get some risk distribution going in the portfolios.
One thing I was going to ask you guys too is, are you guys aware of FNGU and then BULZ?
I've heard of BUL. Let's see. No.
So I think BULZ is closely correlated to TQQQ.
Oh yeah, this
FNG.
is FANG Innovation 3X. So it's the FANG,
Okay.
Facebook, Amazon, Netflix, and Google.
Is that what it was? Okay. See, I wasn't totally familiar with it. Only thing I was looking at was its performance. It was pretty close to TQQQ.
Yeah, I used to day trade momentum with some guys that traded the FANG, and they would always be analyzing those four.
Because I was thinking of working it into the TQQQ for the long-term strategy, but there's not enough. You can barely backtest it. It only goes to like 2018 or something like that.
Yeah.
So
They
I
actually
said, screw it.
They actually spelled it wrong too. It's supposed to have 2 A's for Apple and Amazon.
Oh, really? Wow.
Yeah, it's FAANG.
Gotcha. Okay. Um, are you still sharing your screen, Garen? Is
Yeah.
that
Yeah,
okay?
well, I turned it off when you were trying to share yours, and it wasn't working. But
Okay. All right. Yeah. I just was wondering if something was perfect. I don't. It's probably just my computer, honestly. Like I said, my computer's like 2014, so I'm sure it's not.
Wes, how you been liking the videos and everything, and getting into the community?
I'll be honest, man. I gotta have a pretty big learning curve to do here. My trading style is just a lot different than doing these algorithms, but I'd like to maybe get to a point where I could work it into that.
Yeah, it's more momentum leveraged and mean reversion, but I think as the devs start rolling out more features or more functionality of the software, we'll be able to design more like trading style strategies.
So is it always executing for underlying stock, or have you even gotten into any derivatives?
It just does stocks and ETFs currently. Yeah.
Right, so as it advanced, then you can work in
Say
different
again?
patterns of the market. So as it advanced, the program itself, you can start to work in more or less complex trading instruments.
Yeah. I was showing Jesse this software. I don't know if I can talk about this yet. I really want to talk about it. I don't know if you know what I'm wanting to talk about, Wes. But me and Jesse were discussing.
I haven't heard yet, so.
Okay, I'll keep hush. However, you can ask him tomorrow when you talk to him at work. But there's this Quant Connect software, which gives you data from everything: U.S. equities, financial regulations, brain sentiment. They do Twitter followers and Wall Street bet analysis and like social media volatility spikes and stuff like that. They do stuff from Seeking Alpha, Bitcoin metadata, NFT sales, data link. They also do where was U.S. government contracts. That's probably an interesting one. Corporate lobbying. That's probably another good one. Congress trading, SEC filings, FRED, so you can pull all macroeconomic financial data from FRED. But yeah, this is very interesting to me. So I was talking to Jesse, and I was like, eventually, all we need to find is a coder, somebody who knows how to code really well, and start applying, taking the stuff we're building with Composer and making it a little bit more robust and dynamic, and start doing something with it.
Yeah, no, I totally agree. You got to work your way into it.
Yeah. I think Composer in this community is going to be a great test bed for more advanced opportunities.
Yeah, for sure.
Yeah. So guys, I took a screenshot. I just posted in the chat, so it's right there. But
okay.
Yeah. So my total portfolio is 3664, and I put 3,000 of that is what I started with, and the vast majority is in that TQQQ for the long term strategy.
Where'd you post it at? I don't see it
in the chat. Let me see. Are you not seeing it?
General chat or?
No, in the chat on this inside this room.
Oh, I didn't know there was a chat. Oh, there it is. Okay.
You see it?
Yep.
So I started off with 1,000, and then you see that big line jumps up in one day. That's when 2,000, and then the rest of it is just the algo running. I did put some money in. I put $50 in the Bitcoin 2. That's yours, right, Ken?
Yes.
That thing's great, man.
I appreciate it, but there's room to improve, though.
How many strategies are you running, Derek?
Just 4. So I'm running 2 different versions of the TQQQ for the long term, and then I have the Bitcoin 2, and then I have the this S&P Symphony with leverage one, which is pretty similar to the TQQQ one. It's not one that I've shared, but I can share it with you guys for sure.
Okay.
I think that one is. I'll look at it real quick, actually.
I wish you could see total change performance wise. So it looks like you started out. Did you say you invested more when you went from 1,000 to 3,000?
Yeah, I went from one. So I was at 1,000, and then I put another 2,000 in. Let's see. So I started on August 2nd, and then I added 2,000 on August 17th.
Yeah. That's one thing I hope that a lot of portfolio management softwares end up adding is being able to see just overall returns.
Performance.
Yeah, because I watch.
Yeah, I don't want to see that big jump when I add money.
Yeah, I watch Joseph Carlson's show sometimes, and he's got his portfolio up to like $300,000 or $400,000 now, I think. But they don't show actual performance and returns. It shows how much he's depositing like couple $1,000 every week into it. So it makes it look more profitable and better than it actually is. Right.
Yeah. Yeah. I only added money that one time where you see that big jump, but everything besides that is just the algorithm running. So total invested into that one is 2950, and the current value is at 3501. So that's August 2nd to the 16th.
Okay. Well, is there anybody else that has any questions? If not, I'm going to go ahead and kill the chat or the recording just so people watching the recording don't have to sit through. Unless anybody's got questions.
No questions. Garen, thanks for putting this together.
Yep. No problem, guys.
Great.
Thanks, Garen. We'll be in touch, man.
Yeah, I'm looking forward. Go ahead and make sure you post your names in the threads that you're going to be working on, because I want to make sure that we've got like we don't want to leave a strategy out that nobody's working on and then come back and be like, well, nobody ended up working on that one. All right, guys. Other than that, I think it was a good first stream.